Good evening and welcome to this session of the live virtual coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. Let me begin with the usual incantation. Sahana vavatu, sahana bhunaktu, sahaviryam karavavahe, tejasvinavadhitamastu mavid vishavahe. Om Shanti Shanti Shanti. Wonderful. Nice. It's nice to have all of you here. Jyoti Jha, Mr. Alok, Shivlani, Sushil Kumar, Barik, Mr. Gadhia is here, Abdul is here, Nitesh Bhai Patel, Parth Sardiji, welcome, and others. Of course, our friend Abdul has already started questions. Alok has also started questions. Before we get into the today's topic, let me see if I can answer these questions. As written in section 27, if company vary the terms of contract refer in prospectus, then they shall pass a special resolution authorizing it. If some amount is left after utilizing for it, then according to Rule 7, for utilizing it for another purpose, they have to again pass. No. See, you have issued a prospectus. Now you want to vary. You want to do something else. For that, you pass a special resolution. It is not separate. It's together. It is not separate resolution. Okay. But if you want to amend the memorandum, that's a different section. Right. Whereas this is when you want to vary the terms contained in the prospectus. Then you have to pass a special resolution. One is enough. If private placement offer is made to joint share owner, private placement offer is made to a person who is not yet a shareholder. Okay. You are making the offer to one person. There is no right of renunciation. So technically, to answer your question, technically, when the private placement letter is going to Mr. A, only A can become a shareholder. A cannot include B as a joint shareholder. So your question may be not relevant because the offer is made to one person. Only that person can become a member. You cannot make. Okay, but having said that, I am sure, suppose Mr. A and Mrs. A want to become joint holders, there is nothing wrong in that. But strictly going by what it is about, there is no right of renunciation. So, but if Mr. A wants to include Mrs. A, they can. Okay, but then, and again remember, that letter must be sent to 200 people. So, you can send it to 200 people only. More than, you cannot say, I'm sending it to 400 people. Those 400 people will come together and become joint holders. Therefore, they will become 200. If that is the way you are arguing, then that is not correct. Don't go that route. It is not correct. The letter should go only to 200 named individuals whose name should be identified. Okay. I hope I am being very clear. By understanding your question, I am trying to give the answer. But in my humble view, once the letter is received by Mr. A and Mrs. A can become joint holders. In our example, what happened was A wanted to give it to his son, renouncing. Renouncing is not possible. A cannot say, I don't want it, my son will take it. No. But in my view, I am going more by my logic rather than the section. Section, there is no clarity. But if somebody wants to have joint shareholding, they can. Okay. And in all cases, see, joint shareholders, different situations, they will be considered as single member or not. So every time we have to see the provision and then only give the answer. In this case, the question is not relevant because at the time when the offer is sent, he is not a shareholder. Okay. Later on, once he applies, if he applies in joint names, then it is a call of the board of directors. But the original letter of offer was sent only to one person. That person should be the first mentioned. Okay. This is my humble view. I hope you have understood, Abdulji. See, some of you, in case I'm answering a question and you are happy with the answer, say that. Okay. If you are not, then tell me why. We will write further issue. In section 447, if public interest is involved, but amount of fraud is less than 10 lakhs. So I say you ask this question now, public interest is involved, then straight away third category. If public interest is involved, straight away, no. If whether public interest is involved or not, if it is less than, no, good question. If it is less than 10 lakhs, it will fall in first category. If it is more than 10 lakhs, then it will fall in second category. If public interest is also involved in the second category, then it will fall in third category. I think I have now answered your question very clearly to my knowledge. If you are still confused, that is your problem. First category, less than 10 lakhs, stay away. Second category, whether public interest or not. Okay, because less than 10 lakhs, where is the public interest is the logic. Second category, more than 10 lakhs. No public interest involved. Then second category. Third category, second category where public interest is involved. This is how we have to understand the section 447. Okay. So I'm so happy that you are having, so many of you are having such good questions. So I'm answering these questions and I'm very happy. Okay. So thank you very much, Mr. Shiv Shankar, for that wording. So when section 447 contravent, then how can we punish to them? Yeah, that is the punishment given in 447, imprisonment, etc., etc. That punishment will be there. How it will be done? See, there the prosecution will be, complaint will be filed by the appropriate person, whoever is doing it. See, sometimes it could be the regional director. Sometimes it could be the Serious Fraud Investigation Office. Whoever it is the Ministry of Corporate Affairs which will file the charges. Then that will go to the court. Prosecution will start. Then they will be getting notice and all that. And then the process will go on. It will go to the jurisdictional metropolitan magistrate court. Or whichever, jurisdictional magistrate. Based on the domicile of the company and the directors, it will go to that magistrate. So that is how it should be understood. That's a bigger topic, not in your syllabus. It is in final. Don't worry about that. Now you don't have to worry about that. If that is what you are asking. Shark Tank promoters are asking for investment in their company. I don't know what this Shark Tank is. I'm not aware of Shark Tank. I'll just check up on the net and then I'll get back to you. And I don't know if they are doing private placement or not. Such very specific questions I may not be able to answer unless I go and see what they are doing. I'm not in a position to answer. I don't know who the Shark Tank is. Maybe they are. I am not. My ignorance is pardonable. If they are a big company and I don't know, it is my ignorance. But I'm not aware whether they are doing private placement. My suggestion: go to the net and see if they issued a prospectus. It is public issue. If not, it is a private placement. Okay. See, how are they asking? Are they asking through a prospectus or are they asking through a specific letter? Okay. If it is by a letter, then it is a private placement. Very good. So we've come to a sort of a end to the last class type of questions. Move on to what I think is possibly let me not use the word very, the core topic of company law. It is here that company law becomes so relevant because this form of organization is meant to provide limited liability to the members. And that happens through share capital by issuing shares so that a person who subscribed to the shares becomes a shareholder with a limited liability. So it is necessary for us to understand how shares are issued, what are the types of shares, how shares are issued, how shares will be thing and all that. And how, there are many things. It's a very long topic. So we'll have to do it there. And just give me 1 minute. One second. Okay. So share capital and debentures. So share capital and debentures is the topic we are going to see today. This is contained in Companies Act 2013, Chapter 4. So as usual, you have the share capital and debentures rules 2014 are also there. Okay. Now, so Chetan Gadia comes again with his thing, Shark Tank. Shark Tank is a show where startups come and raise investment daily on Sony TV. I didn't know this. I don't watch Sony TV. In Shark Tank, people comes to get investment from different big people who already had established their company. See, this is neither private placement nor public issue. These fellows are coming and making a pitch. Once somebody likes the idea, he will go to him now. At that time, it's a private deal. This is not. But technically, the Ministry of Corporate Affairs can say this should not be done. But remember, it is done on a program where public are going to watch. But he is not soliciting from the public. He is trying to get money from specific investors. So it's like It is like private placement, but like that. But that's what I'm saying. It's a gray area where we are operating. Okay. So that is how it is. Nidhi company, if a person or one person made in arrears of partly, so still the company need to serve document to the lender. Yeah, please read that part of it now and get your clarity. It's not at all important from the exam point of view. Kindly read that part of the institute material, and if you still don't have clarity, maybe later I will take that question. Not very relevant question. Okay. See, if a person has 1% paid up share credit, but he has made calls in arrears, partly paid up shares. So no, if he's holding 1%, they have to serve the notice on him. Okay, that is my understanding. Okay, these are all very, very. You can ask such questions. I'm not discouraging you, but be careful. Is it helping you to qualify that this type of question is in-depth questions? But only thing you have to be sure of, Mr. Abdul, is after asking these in-depth questions and there is a very, very fundamental point that you don't know, then you are in trouble. See, I have noticed that students who ask in-depth questions now, when the exam they are asked a very, very fundamental point, they don't know that. They don't know how to write the answer. So my suggestion, concentrate on the important, vitally important, huge rocks there. Know them well. Then get into these nooks and crannies and small issues. Okay? This is my advice to you generally as a student. Don't take me otherwise. As a teacher, I'm willing to take any question, however irrelevant it is. But from the exam, if your goal is to clear the exam, then concentrate on those big important areas where I will shout and say, hey, this is important. When I say that, concentrate on that. Chances are easily you can clear the exam with very high marks. But if you keep breaking your head on every small letter and word in the institute material, nooks and cranny, you go and get confused, you may miss out the big things. This is my humble suggestion. So please try to avoid that approach where you are so concerned about small, specific questions that you miss out the bigger ones. The bigger ones are fairly simple. They can easily be understood, remembered. Exam the question comes, you write the answer, you get the mark and go. When something is so simple, don't complicate your life is what I would humbly suggest. Later on, when you become a member of the institute, yes, you may have to take one nook and cranny area and talk about, because there the client will be paying you the fees. There will be some logic in understanding and advising him. Even there, I'm telling you, there will be areas where nobody will ever come to you for consultation. Knowing that is not going to help you at all. So this is a general advice I'm giving you. I've already chanted the mantra, Mr. Ganesh. Maybe you came late. Before, in the beginning, I chanted it. Fantastic. Just like the earlier topic, and this topic also divided into two parts. One is share capital. The other is debentures. Now in share capital, 43 to 70. Okay. Debenture key section, 71. Okay. We'll see it last. Share capital is an important topic. Okay. So, Mr. Sudipta Das makes the valid point that we are asking practical questions because qualification and quality both are important. Absolutely. I think you are not listening to what I said, Sudipta. I'm not saying don't ask questions. I'm saying from an exam perspective, look at it is what I'm saying. I also agree with you. Okay. Qualification and quality both are important. I am of all people, I am very much particular about that. Okay. Because mere qualification is not enough. But you should know the relevant portions well before you go into the nook and cranny is what I'm saying. Continue to ask practical questions. Nothing wrong in that. I'm absolutely happy about. I'm not discouraging questions at all, including Abdulji. Kindly go ahead and ask questions, please. The far be from me any intention to discourage questions. I'm only saying don't get into chota areas where there will be no exam concentration. So then, this is a broader strategy for exam preparation that I'm trying to help you to understand. If you still feel that asking nook and cranny question and getting answer for it will make you successful in the examination, my duty to tell you any number of, okay, you ask me any number of questions, I will answer. Don't worry about it. My concern is not that you should not ask. Please go ahead. Okay. Good. Good. Now moving on. The Shark Tank wala, I'm not able to comment here. Let me go to the net and see some more information on how they operate. See, when everything goes well, nobody is bothered, boss. But something goes wrong, then everybody will be in trouble. Okay, that's all I can say. Because if somebody is asking for money from the public, then certain disclosures and certain things are required. If that is not done, then it is a violation of the law. Suppose comes, I don't know how the program structured. Don't explain to me. I'll go and watch it and find out. The point I'm making is, suppose there's an entrepreneur, he is being interviewed. And in that interview, he talks about his business. And one of the goals of that program is some more people are watching it and they're looking for businesses to invest in. So they see this guy's interview or they see this guy's presentation and they feel that, hey, this looks like a good idea. Then they independently approach this guy. Then a negotiation starts. Then he gives them documents. They verify it. And fully opening eyes, they enter and make investment in it. There is absolute no private placement, no prospectus. But suppose somewhere he goes around saying, my shares are available. Anybody who wants to make an application to me, that would amount to making a public offer of shares. Be very, very careful. Similarly, suppose the guy's company is a private company, then if he makes a public offer, he may be violating his very condition itself. So this is something that the Sony TV might have missed out on in their thing. Usually, angel financing will neither come under private placement nor under public issue. Private angel financing is basically people knowing about it, going there and doing it. Merely making a pitch or a presentation is not a public issue. Merely making a pitch, either in a public, see, there are a lot of organizations like the Indus Entrepreneurs who give an opportunity for entrepreneurs to make a pitch. And the startup, these angel and all those fellows will come. So they got money to burn. They will invest in these ventures, something like that. That is not private placement. That much I will tell you. That what will happen is, at the end of that exercise, there will be meetings and there will be discussions. And it will be a private offline sale or allotment of shares, which will happen independently. Okay? So don't have to worry about either of these sections. It's an allotment of shares. And for that, only PA is 3. That's all, nothing else. Okay. Documentation may have to be done. Some share purchase agreement and all will be there. It's like private equity investment. Okay. If the investor is a QIB, anyway exempted from private placement. Right? Good. I have written this by hand, not because I didn't have, because see, I have to show this diagram. Usually, in my regular classes, I will draw this diagram on a board. Here I know you can do that and all, don't immediately educate me. I'm not able to do it. I'm not interested. So I have drawn it on a paper, take a photograph and I have put it here. Okay. And every time I don't want to do it, I want this to be permanent. See, look at this diagram. It's a nebulous, shapeless mass. This is the capital of a sole proprietor. It is nebulous, shapeless, constantly changing. This is the capital of a sole proprietor. In the balance sheet of a sole proprietor, the capital account will be constantly changing. When you make profit, it will be added. Drawings will be reduced. Sometimes it will be negative also. Capital can be a negative also. So, capital of a sole proprietor is nebulous. The capital of a partnership is similar. It is also nebulous, except it is divided into partners' capital, right? So, you might have fixed capital portion in the middle, and then around that you might have the nebulous current account. Whatever it is, this number, this figure keeps changing. Got it? The minute you come to a company, straight away you see the rigidity of the framework. The capital of a company is fixed and it is divided into units of equal value called shares. I know my lines are not straight, but what you need to understand is each one of these squares has the same area. Each one of these squares. So this grid is the share capital of a company. A single square, a small unit, is a share. So each share is a unit of equal value. The overall capital of the company is fixed. It will never change. Okay. So this is something so fundamental, so peculiar for company form of organization. The advantage here. Sole proprietor cannot do anything. He cannot sell to anybody anything. The capital is his. Partnership, a new partner may come in, but he cannot do so without the knowledge and signature of the others. Whereas the minute you say you have formed a company, you divide it into units and allot these units to people. Once the unit comes to me, goods are created. When the shares are allotted, they become goods. They become movable property. Once the share comes to me, I can sell it anytime to anybody. In the case of public company. In the case of private company, I have to make the first offer to the existing shareholders. If they do not buy at the given fair value, then I can go to anybody. Even for a private company, there is no prohibition on transfer. There is only restriction on transfer. How is it facilitated? By the fact that the company's share capital, the company's capital is fixed and divided into units of equal value called shares. So that when I sell one share, that's one share, 2 shares, 3 shares, whatever, no problem. I'm not selling 20% or 30%. I'm selling 1 share, 2 shares, 100 shares, 1 lakh, 1 crore, whatever it is, into number of the value that we fix. I get my money and I go. It's so simple. This meant people were willing to invest in companies. This meant the flow of capital to business became better. See, just like you're talking about Shark Tank and other things, of course, people also got money. People also got an opportunity to lose their money. Okay, that is, of course, that is part of the fun. Okay, so people got the money to invest without any problem. See, if I become a partner of a firm, I have unlimited liability. In case one of the partners borrows and runs away, all the partners are jointly and severally liable. Whereas the liability of the shareholders of a company is limited. Right? Wonderful. Wonderful. Okay. So, great. Moving on. I have read sincerely, even I cannot understand circumstances, the expert is not liable. Correct. I think I also made the same point, right? Did I say something differently? Did I say expert can be made not liable? If I have made that comment, no. One case he can be made not liable is when he has withdrawn his consent, which is totally different. See, he gave his consent and then withdrew his consent at any time before the registration or shares are allotted. But if the shares are allotted, khatam ho gaya, nothing can be done. I think this is what I said. Did I say something wrong, Mr. Chetan Sharma? Are you correcting me? Did I say something wrong? Just would like to know, because suddenly out of the blue you have put this comment. So, good. Now this definition will become a little more relevant. Share is a share in the share capital of a company. So we are referring to this unit. So share is a share in the share capital of a company and includes stock. We have already seen stock, right? I don't want to waste your time. Again on stock, don't waste your time. I don't want to waste your time. But if you want to waste your time doing research in stock, I will not stop you. But let me assure you, no company has as of now issued stock. Stock is not important from exam point of view. Don't break your head about stock. I have told you, in spite of that, if you say what is stock, what is stock, what is stock, you'll be wasting your time. Okay? Now, I already told you, shares, debentures, or any other interest of a member in a company to be movable property. Okay? Suppose the company does not have share capital. Then he will not be holding shares. Rather, he will have an interest in the capital or interest in the business. 20%, 30% like that. That is only called interest. That interest also can be sold. It's a movable property. More importantly, shares are movable property. Shares are movable property. Very important. Debentures also movable property. Once they are allotted and come into existence, they are movable property. But today, see this watch, which I am showing you, is a movable property. Tangible. I can touch it. If you want to buy it, I can give it to you. You give me money. Transfer is by mere transfer of possession. Transfer of movable property is by mere transfer of possession. I give it to you, you take it, you become owner, I am not the owner. Kadam ho gaya. But how can I transfer a dematerialized share? How can I pass possession? Or even, let us say that share, I have a physical share. If I give the share certificate to you, is the sale completed? Then why is there an instrument of transfer? Ponder on this, and I'm sure some of you who are aware will even give me some wonderful answers for this. Why is there an instrument of transfer? Later on, you'll be seeing transfer in detail. In this topic, we'll be seeing transfer of shares, transmission of shares, etc., etc. Now, why should there be an instrument of transfer at all? After all, shares are movable. When I give the watch to you, do I also prepare an instrument of transfer of the watch? And do we inform Titan Industries that this watch was sold to you by me? And do you say that, yes, I have purchased the watch? And will Titan Industry maintain a register of watches in which it will mention that, so register of owners, in which they will mention this watch, Srikanth now gone, like that to whoever. Okay, for this. Think about it. Why is it like? Why is there an instrument of transfer? Shares are mobile property. No problem. Section 44. Mobile property, ownership is transferred by mere transfer of possession. Ownership in mobile property is transferred by mere just surf transfer of possession. Then why instrument of transfer? There's a question I'm asking you. Normally, you will ask question. This time, I'm asking question. Mr. Parthasarathy says to register as member of company. Very, very intuitively said Mr. Parthasarathy, but going a little beyond that. Go a little beyond that. Of course, then the transferee can inform. Now, why transferor is also signing? See, I am now the transferee, I am the owner. Now, so I send the share certificate with my letter. Why the transferor should also sign? Both are signing. Because the same cannot be sold to other person. Not clear. Not clear. What your point is not clear. What are you trying to say? No problem. Think. See, my guru, Professor K.S. Anantharaman, used to ask questions like this in the class. And he used to make students think. And sometimes the student will be right. Sometimes they might not know. They will give incomplete answers. Then we'll complete it. Chalo, whatever it is. Shares, debentures, etc. can be transferred in the manner stated in the articles. So the transfer of shares is governed by the articles. Of course, we have two important sections that protect the rights of the shareholder in case the company refuses to register transfer of shares. In case the company refuses to register transfer of shares, some remedies are available in the Act. Otherwise, the articles define the procedure. It has to be complied with. Whatever the company prescribes, you are bound by it. Reasonably, if they say you have to give these things, you have to provide. But they cannot ask for all sorts of things. Transfer, maximum instrument of transfer. Once the instrument of transfer is uploaded, that is it. Okay, let's see some of the answers. The time of transfer is fixed. Okay. If the companies need to know who is the holder, correct. But go a little deeper. Mr. Parthasarathy already gave us that point very correctly. He said this document is meant to inform the company about the member, to register that person as a member. But go a little deeper than that from a legal perspective. Agreed. Because to identify dividend and liability payable, death, insolvency, lunacy may be reasons for transfer of shares. No, death, insolvency and lunacy are examples of transmission of shares. I will talk to you when I come to transfer and transmission. His acceptance is necessary. First time I'm hearing a more legal approach. Think about it. When the signatories signed the memorandum, there was a contract between the members and the company, and between the company and the members intersect. Now, when I sell the share, I am walking out of that contract. Therefore, it's actually a novation. Think about it. So I have to give my information that I am walking out of the contract. Also, the new guy is now entering into the contract. Remember your definition of member. What did we say? Every person who applies in writing to become a member and whose name is entered in the register of members. This is that application in writing. That instrument of transfer is the mode by which the transferor informs the company that he is no longer bound by that contract. And the transferee informs the company that he is now bound by that contract. This is a more legal understanding. If you have a generic understanding, okay. So way of understanding, if you do, your knowledge of this law would become deeper. That's all. Yes, in addition to this, it also helps us to freeze the, as rightly pointed out by Miss Lakshmi, it fixes the date of transfer. Thereby, it gives us a clear idea on from which date who will be entitled to dividend. So record dates are there. If this record date is passed and this guy is now the shareholder, he would get the bonus. He would get the rights offer. He would get the dividend. So that also is a corollary, is a resultant of this basic contractual issue. Okay. Beautiful. So I just thought, I know maybe some of you might feel that this is unnecessary and, unnecessarily deep. But your understanding now is legal. Okay. Think about it. Fantastic. Moving on. Share capital basics, section 43. There are two types of shares. Equity and preference. Equity and preference. Two types of shares are there. Classes of share capital, two are there. Equity and preference. I mean, some of it you know already. Some of it is very basic. And maybe I'm wasting your time, but still, let's go through it for what it is worth. You studied this in +2, I'm sure, or PUC or junior college or whatever you call it in your state, when they taught you this. But just to remember, this is the original section. Equity share means all share capital which is not preference share capital. Again, they've started here. Negative definitions. What is equity share capital? That which is not preference share capital. Okay, bhaiya. What is preference share capital? Now I will give you a definition, which is exhaustive. Please understand. Preference share capital ka definition is exhaustive. It defines a preference share. Anything which doesn't fall in this definition is equity share. Preference share capital is that part of issued capital carrying preferential rights. Preferential means between two, one is given first treatment, first before. He gets a priority. Okay. So preference shareholders get a priority. Pehle, they come first. Only then the equity comes. So preferential. When will they come pehle? When will they come front? When will they come first? At the time of payment of dividend, I have only so much profit in my kitty. To whom should I pay the dividend first? Pehle, preferential. First I have to pay the preferential shareholder. If any money is left, only then the equity will get dividend. Got it? So preferential right with respect to payment of dividend, whether by way of fixed amount or fixed rate. For example, fixed amount means 2 rupees per share is a fixed amount. Correct, sir? 200% of the paid up nominal value is rate. For example, the nominal value of a share of Infosys is 1 rupee. 1 rupee. So if they give 500% of 1 rupee, how much are they giving? 500%. How many rupees are they giving per share? 500% of rupee 1. 500 divided by 100 into 1 gives me 5 rupees. 5 rupees per share. 5 rupees per share they will get. That is 500% of 1 rupee. Percentage, referred as percentage. What did I understand from this? If I did not know earlier that dividend is calculated on the nominal value, now I know that dividend will be calculated on the face value, on the nominal value. Okay. Repayment of capital in the event of winding up. We already saw the word winding up. In case the company wants to close, then whether it is solvent or insolvent. Solvent meaning when the assets are sold, the value that I get, the money that I get is more than sufficient to pay my creditors and give my equity and preference capital back. Solvent company. Insolvent company, when I sell all the assets, the amount realized is not sufficient to pay my debts. Forget capital. I am not even able to pay my debts in full. That such a company is called insolvent company. Insolvent company. Okay. whatever it is, at the time of winding up, when the liquidator has sold all the assets and paid the creditors, now he is going to pay the shareholders now. In that queue, who will come pay preference capital? Then only the equity. In the queue, in the shareholder queue, equity will be behind preference, right? In the overall queue also, equity will come last. Secured creditor will come first. Like that. There's a order of payment. Okay. So, and then some preferential payments will come. Workmen and all will come. Then all creditors. Then all of us. Okay. Then if money is still left after paying them, then preference shareholders. If money is left after paying preference shareholders, their capital is repaid. Then and only then the equity will get it. Got it? Now, in case of private company, section 43 shall not apply where memorandum or articles of association of a private company so provides. They are given a notification. Now, what does it mean? This means a private company may by its articles state that the company may issue preference shares which will have preferential payment or preference in payment of dividend. But no preference has to repayment of capital. That is, they can have their own way of defining preference share. They can have their own way of defining preference share. Okay, so section 43 shall not apply where the memorandum or articles of that company so provides. Do you remember where earlier we said articles and memorandum and articles are subservient to the act? Which is superior? Act. We also said where the act specifically provides that the memorandum and articles can provide otherwise, then that will prevail. This was the example that we saw at that time, if you remember. So this is one case where a private company can have its own definition of preferential right. But for a public company, first you have to pay the preference dividend. Only then you can pay the other equity. First, you have to pay the capital for the preference shareholders with the premium, whatever. Then only you can pay to the non, right? So this is how it is. Now, normally there should be only two types of capital, equity and preference. But amongst equity, there is one small distinction. As far as financial books are concerned, no big difference. Okay. But with regard to the terms of issue, there will be difference. For example, you could issue equity shares with voting rights. Means those equity shareholders who have voting rights can vote at the annual general meeting. You can also issue equity shares with differential rights as to dividend, voting or otherwise. So, equity shares, but they do not carry voting rights. Obviously, if a shareholder is going to sacrifice voting rights, he will want something else. Maybe you will promise him additional 5% dividend. Additional 5%. We'll see more about differential voting rights very shortly. Right? So basically, equity shares with voting rights, equity shares with differential rights. Abdul Ji. ESOPs will fall under which capital? सिर्फ दो है ना, आप बोलिए under which it will come. ESOP cannot be a special type of capital, right? I am issuing shares to my employees. Okay, now tell me what type of share my employee will take. I want you to think and answer, Abdul. I want you to answer. I mean, now what I'm doing now, I am now converting you into a thinking machine. Instead of a questioning machine, you are going to become a thinking machine now. So you're going to answer this question to me. You are an employee of a company. For example, Dubakur Limited or Freshworks Limited. You are an employee. Now the company has got preference shares, right, which are carrying fixed dividend, repayment, etc. The company also has equity. No limit dividend, but it's listed on the National Stock Exchange and Mumbai Stock Exchange. Now you are an employee. Which one will you want? You want equity share or preference share? You tell me. Whatever you want, I'll give you. So the ESOPs will not fall under any capital. It's a choice. Usually, invariably, which one would you prefer? Suppose you are employee of Infosys. You will prefer a preference share capital of Infosys or equity share capital of Infosys. Aap boliye na. But ESOP is not some special type of capital, a third category of capital. Or if you have got such an idea, kindly reorient yourself to thinking differently. So you yourself have told equity. So you have answered your own question. Now are you able to see, Abdul, where we are going with this? Many times you can answer your own question. Okay, but I will help you to do this in future. Whenever you ask. So first to clarify, employee stock option scheme is a scheme by which employees will become entitled to shares. These shares are usually equity shares. Okay, to answer your question. So can we say that? No. So can we say that preference shareholders are more safe than other shareholders? Yeah, between the two, preference slightly safer, which is why preference share capital will not, there will be no, see, it will be listed on a stock exchange, you can transfer it and all. But unlike the equity, the preference share value will not go up or down. It will be almost like a debt instrument. Almost like a debt. Why almost? It is almost a debt. It is not a debt instrument because the relationship is owner. Okay, equity. And what the return they get is dividend, which is an appropriation of profit. But for that, preference share, see, if I have to value the preference share, I have to do it in the same way that I'll value a bond. I have to see what is the future dividend yield, what is the repayment at the end, all these bullet payments, and then that final payment. And then I have to see what will be the present value of the thing at the current market rate of interest. There will be a coupon rate. That is how I will calculate my dividend. So the dividend I'll be getting regularly for the next 6 years, 5 years, let us say. I have to calculate. Then 5 years, I have to discount it to today. And that final repayment of capital, along with my, premium or whatever. That also I will factor it, discount it to today using the current market rate of interest. I will get a value. That will be the value I will fix. This is the same method that we use for bond valuation. In case you studied or you are studying bond valuation, you will come across. So almost it's like that. It is safer than equity. No doubt about it. It is safer than equity. Whereas equity, high risk. Okay, because there is a high risk, equity value also will keep going. You are willing to take that risk. Share market is willing to reward that risk by giving more. So there's a demand. So the price will go up. But preference share, even if there's a demand, price will not go up. It will hover. There will be a yield to margin, and it will sort of tend towards that price. Sometimes with interest rate vagaries, it may go this way, that way. But that's more a function of the interest rate than any inherent valuation of this preference share. Whereas equity share will have inherent or intrinsic value, which is based on the company's performance. Such a translation of value will not happen for preference share capital. But it is safe. Because in case the company goes into winding up, this fellow will get his money paid. But no assurance. If the company is insolvent, then preference shareholder also will get only 3 vertical lines on the forehead. Okay. No assurance. The only guy who is ultimately safe is secured creditor. Because in case anything happens, he can enforce his security, take his money and go. That is the best safety. But he will get only interest, which is a fixed rate. He won't get any other rewards. Okay, I thought I will explain all this to you to help you to understand. Yeah, kindly go to the Bare Act and verify it. Please don't raise questions relating to study material in the class. I will note your point and I will see what can be done. Because I do not have immediate access to the study material to verify. Okay, I have taken this. One thing is, while preparing this notes, I have referred to the Bare Act and I have gone by the Act. So kindly take it or leave it. Okay. If you want to go by the Institute Ka material, please, if you think it is not there, leave it. This is a very, very unimportant area in the syllabus. So because of this, nothing is going to happen. Okay. Don't worry. Can the same person hold equity and preference shares both of the company? Yes, he can. Why not? What prohibition? You can, but your roles are going to be different. See, as an equity shareholder, you have certain rights. As a preference shareholder, you can be debenture holder also. Who's preventing you? More the merrier. Come, give all your money. We will forget your money and go. We will give you debentures. We will give you, in Shark Tank, we will offer you debentures. We will offer you equity. We will offer you preference. Then finally, we will put 3 vertical lines on your forehead and send you off. Okay, you are welcome. If you have money, come, give it to me. Okay, I mean, give it to this company. Your choice. That is the problem with corporate form of organizations. While it enables people to collect money from the public easily, it also gives an opportunity for frauds and for people who are not business savvy to take money and misuse it and then become insolvent. This is unfortunate. Okay, this is the point. This is my view, not necessarily the view of the institute. I'm merely stating my view as a professional with 35 years experience. I have found equity, the share market gives opportunity for incompetent people to come and take money from the public and misuse it, even in good faith. Sometimes frauds actually make some benefit to the shareholders initially. This incompetent fellow to whom you give money, he takes the money and destroys value for everybody. And my view on most startups is that most startups are not well-run businesses. They come and give a pitch and go, but money is a very, very risky money. That's why the return that is expected by the venture capital is very, very high. Okay. Good. Now, some of you would have a doubt. Has any Indian company issued shares with differential rights? Yeah, I just did a small research because sometimes students ask practical questions, just like one of our friends told us, rightly he told us that we can ask practical questions like that. So this is one interesting point. Yes, Tata Motors and Pantaloon Retails. Now, I think it's called Future Enterprises. As of now, I don't know. As of preparing this slide in 2020 AD, this was called Future Enterprises. So I'm so sorry. So this company has issued differential voting right shares. DVRs means differential voting right shares. Differential voting rights shares. Or if you want to be more, correct about it, shares with differential voting rights. Okay, so how they have issued 1/10 voting right as compared to ordinary shares in exchange for 5% higher dividend. So when you want to buy my differential voting right shares, what will happen? You will also pay 10 rupees per share. Or if I'm putting a premium on it, you will pay the same premium because the valuation is the same. So 10 rupees plus whatever premium I'm charging, you'll take. These shares will be also listed on the stock exchange. They will get the same value because you're also undertaking the same risk. It is not as if your risk is less. In case the company doesn't repay the capital, you will also lose. But what you're doing is you are accepting reduction in your voting right. How? Normally, we'll be seeing that very shortly. And by now, you remember on a poll, 1 share, 1 vote. On a poll, 1 share, 1 vote. But once you accept this DVR, the ratio will be 10 shares, 1 vote. Or if you're holding only 1 share, then you will get only 1/10 vote. Your vote will be counted as 0.10. For every 1 share you hold, you will have 0.10 votes. So easier way of putting, if you have 10 shares, you will get 1 vote in it. So at the meeting of the company, when you come, or if you're voting electronically or postal ballot, your 100 votes will be equal to 10 votes. Whereas a normal shareholder, equity shareholder ka vote, 100 vote will be equal to 100. So your power in the meeting will be less. But in order to sacrifice that power of voting right, you are getting 5% extra now. Suppose this year I am declaring 28% dividend on equity shares, you will get 33. You are getting the 5% extra now. Therefore, you are saying, chalo. Now, sometimes people ask me, and I'm sure you also would like to ask, why would people give up their voting right? Why not? Suppose Dhirubhai Ambani tells me, Srikant, no voting rights, 10% more dividend. Are you okay? So, okay, thank you, sir. Because I trust Dhirubhai ji. He is going to handle the company. My vote, what is going to make a difference in the company? But if I by giving it, I'm getting, and all my other rights are same. I have no loss. Everything else is same. My right as a shareholder is there. Everything is same. I'm entitled to AGM notice, etc. Except that my vote. So instead of saying 0 votes, he will say 1/10 vote or 1/5. I agree. Chalo, take it. Give me more. That's all. Okay. So this is an internationally recognized concept. Nothing wrong in this, nothing illegal about this. The type of capital issued by board. Kya bhaiya, what are you talking about, Alok? Kya? What is that? Type of capital issued by board. See, please understand, the board of directors is issuing nothing. It is the company which issues the capital. The board of directors is only the agent. They announce it. They allot the share at the meeting of the board. That's all. Okay. The board does not issue any capital. I don't know whether there is any special such capital or not. Okay. Can the same person hold equity and preference shares both of the company? Yes, I can. Sir, can existing equity shares be converted? We'll see that. We'll see that very short. Ordinary share means normal equity shares. Equity share capital with voting rights. With voting rights. Equity share capital with voting rights is called ordinary shares. Okay. The word ordinary shares is used. I have taken this from a press release where the reporter has used the word ordinary shares. Technically, what he or she is meaning is equity share capital with voting rights. Okay. Anyway, let me make a note of what Geet Chaugan is telling, so that I will check up and I will get back to you, because you are so worried about this. Let me check up. 43 exemption to private company. Hai ya nay? Question. Srikanth does not know the answer now. He will verify and get back. Remember, even Ravan was given 1 day time by Ram. Go today, come tomorrow. Okay, so teacher can be given a little more time. Allow him to go back, check and come. Ratan Tata sir has issued DVR to purchase of Ford. Great, great. So nice of him. So happy about that. Whatever. So long as you have understood the concept of DVR, I'm happy. Supradaji asks a very interesting question, which is, can existing equity shares be converted to DVR? Okay, we'll see that in a short while, madam. Part of the topic. Now, procedure for issue of equity shares with differential rights. Right? Today, I was in the SIRC for a particular activity. I was conducting a GMCS session, advanced GMCS session, group of students. And we had one very good speaker coming there in the middle. One of the council members, he came. One thing I heard him say, which I felt so happy, because that is what I also mentioned the other day. Do not write paragraphs. Do not write pages and pages. Write points. Each point should be having value addition to your answer. The mark is given point by point. For example, there will be a question in the examination. Okay. Mediocre Limited wants to raise funds. They do not want to give ordinary equity shares. They wish to issue differential equity shares with differential rights. The managing director of Mediocre Limited has consulted you about the procedure for issue of equity shares with differential rights. Please advise him. This is not a problem question. This is a theory question disguised as a problem. Answer is here. This is all you have to write. Maybe if you want, I have given bullets, authorization by articles. You want English, you write a sentence there. Is it? There should be an authorization by the articles, or the articles of association of the company should authorize it, or there should be a provision in the articles for the same. Hey, forget it. Yeah, you just write authorization by articles also, you'll get marks. Then authorization by ordinary resolution. Okay, if you want to be a little more clear, you can say authorization by ordinary resolution, or authorization by members by passing an ordinary resolution. Okay. In the case of a listed company, the proposal shall be authorized through postal ballot. Later on, when you come to management and administration, you will learn that certain matters by a listed company shall be done, or I think shall be done only by postal ballot. Certain matters shall be done only by postal ballot. Okay. And when they say postal ballot, it includes e-voting also. You'll see that. Whenever they say postal ballot, it includes e-voting, meaning earlier they used to send the resolution printout by post, and they will send a self-addressed stamped envelope so that you can choose your option, then put it in the envelope, seal it, and send it back. For that, they gave you 30 days time. That is postal ballot. Now, all that is not needed now. Straight away, they will send you a mail to your registered email ID, which is with the DP, which would have gone into the register of members. That is all they will send. If you have changed your email ID, God save you. So, to that email ID, they will send a mail. That mail will have a link. It will take you to the electronic voting page where the proposals will be there. You choose, for which they will also give you a single time user ID and password, which you can, IPIN and password, which you can use. And with that, you will vote and come out. Or if you are a member, they might give you a permanent IPIN, but rarely they do that. They create an IPIN and password for this. They give it to you. You go there, log in, vote, come. E-voting is so simple. Okay. So postal ballot or e-voting. So the ordinary resolution should be passed. Voting power of all shares with differential rights not to exceed 74% of total voting power. That is, if I take the total voting power of the company, then those shares with differential rights should not exceed 74% of total voting power. That is, a company can keep on issuing shares with differential voting rights, but the total voting rights of those guys cannot become 74% of the company, right? So that there is a condition that they prescribe. I give an example to help you, because this may be a little confusing. Let us see any more question. What is given in ordinary resolution? The resolution will authorize, resolve that in pursuance of section 43 and rule 4 of the act, rules and other applicable provisions of the Companies Act. Okay. Company the board of directors be and is hereby authorized to issue 2 million shares of rupees 10 each, carrying differential voting rights of 1/10 vote for an extra 5% dividend. That's all. That will be the ordinary resolution. Once the members approve it, the board will issue. Got it? So that is how it will be done. Okay. What is given in thing? Is this format correct? To issue equity shares differential, the company need to comply with the following conditions points. Okay. Agreed. Then put a colon after that. Don't put conditions. Correct. Following conditions, colon. Perfect. Then points. Beautiful. So, in order to issue, don't say issue, in order to issue equity shares with differential voting rights, the company needs to comply with, company singular, company needs to comply with the following conditions. Beautifully said. Following conditions. 1, 2, 3, 4. Beautiful. Excellent format. This is the format actually you should use. Correctly said. Okay. So, voting power of all shares with differential rights not to exceed 74% of total voting power. I don't understand. Yeah, my God. Let us see. Now, normal equity shares. Number of shares, 1 lakh. Equity shares with DVR, number of shares, 2 lakhs. Right? Normal equity, ordinary, normal means not having, that is their ordinary equity shares which have full voting right. So, which means for 1 lakh shares, 1 vote per share. Whereas for the equity shares with DVR, it is 1 vote for 2 shares. So for every 2 shares, there will be 1, means half. So the 2 lakh shares will have only 1 lakh vote. Why? Because half. 1 vote for 2 shares now. Whereas here 1 vote per share, 1 lakh will become 1 lakh. So what is the total voting power? 2 lakhs. Am I correct, sir? Total voting power is the total number of votes which will be cast. We saw the definition in preliminary. The total number of votes which will be cast in case all the votes are cast. Here, how many votes will be cast totally on a resolution, on a poll, 1 share, 1 vote, or whatever it is, whatever ratio. The total number of votes which will be cast is 2 lakhs. So the total voting power, that is total number of votes, is 2 lakhs. Out of that, voting power with equity shares is 1 lakh, which means 50. Since it does not exceed 74%, It is allowed. Suppose they keep on issuing equity shares with differential voting rights and keep holding the normal equity share, it might reach a stage where this 1 lakh may reach a stage where it becomes 3 lakhs. Then this will become total 4 out of that 3. That means 75%. So it will exceed 74%, then you cannot issue. So have you understood this numerical example? If you have, kindly give me a small confirmation in the query pad. If not, ask a question, I will answer it. Because this is a question waiting to happen in the exam. If I were setting a question, I would set on this, where I would give you numbers like this and ask you to find out if that company can issue voting rights or not. Right? If you're writing a theory question, the way I mentioned it, you don't have to give all these numerical example and all. I have given you this example only to help you understand the meaning of this sentence. Voting power of all shares with differential rights not to exceed 74%. Here it does not exceed. But it is quite possible that if I freeze the normal equity shares and keep issuing only equity shares with DVR, let us say I issue another 4 lakh. Let us say I issue another 4 lakh shares. 4 lakh, another 4 lakh. That total 6 lakhs. So 6 lakhs, 1 vote for 2 shares. This will become 3. This will continue to be 1. Then this number will become 3 by 4. 75. Then not allowed. Which means that last tranche I cannot issue. That last tranche 1 lakh or whatever it is, I have to restrict it. So that the total DVR voting will be not more than 74%. Or it will be exactly 74 or less. Thank you for this. Continuing with the conditions. Thank you. Anna, DVR means differential voting right. See, in Tamil Nadu, we have a proverb. Somebody was listening to Ramayana till early morning 3 a.m. He asked, who is Sita? Like that, we have been talking about differential voting shares. And now you're asking, sir, I have understood. Just to tell me what is DVR. Sorry, it's very humorous for me. Don't mistake me. DVR means shares with differential voting rights. You've seen here now. See, Tata Motors and Pantaloon have issued what? Differential voting right. Normally, 1 share, 1 vote. Whereas the DVR, differential voting right share, for 2 shares, 1 vote. Usually, the number of votes will be less for DVR share. As a compensation, we'll give them more dividend. Obviously, otherwise, why should you agree to a DVR at all? So that is the reason. Why 74% and not any other person? I will cry. Abdullah, you go to Abdulji, you go to Delhi, you go to Nirmala Sitharaman or whoever was the donkey which enacted this provision. Go there, find out the address in Delhi or wherever they are now staying. Go and ask them. How do I know? I'm only the teacher of this law. I didn't draft it. I seriously don't know. Honestly, I don't know. Okay. Fix it at 75%. Maybe they feel up to 75 should not be there. Seriously don't know. Okay. Something they have told. Okay. But I don't know. Seriously, I don't know. If anybody else can throw light, I would be more than happy to be educated. Specific to Mr. Abdul's question is, why 75% and not any other percentage? In fact, my Guru K.S. Santraman would answer this question in a different way. He will say, you are asking the right question to the wrong person. Okay, the person you have to ask is the draftsman of this section who wrote this rule and then who wrote that notification or amendment to the rules on 16.8. Okay, see, the idea is, okay, if you want me to give some example reasoning, I would say they don't want companies to keep on issuing DVR shares and diluting normal equity shares so that the shareholders will have no. See, for example, if the promoters keep this normal equity shares and keep on issuing DVR, finally the promoters will be holding 1% share, but they'll be controlling the company. Whereas these DVR wallahs will not have any voting right like that. Then they will be having 80%. See, seriously, I'm not able to understand, but maybe that is the idea. That is, they want DVR to be capped. They want the DVR to be capped. That is all. Okay. Special resolution again, by Saab, you are going to 75%. You are getting into that 75% trap. Agreed. See, now, I don't know. See, now what can happen? Now, if it is 74%, what cannot happen? Okay, this you know already special resolution, the definition. So let's not go there at all. Can the DVR have higher voting rights? No. No. Less or even zero, but no. Means, okay. No. I have not heard of it. It is not contemplated. No. It's a good question. My answer is no. Higher rights, no. Okay, now we come to a very, very important point. There should be no default in filing financial statements and annual returns for 3 immediately preceding financial years. 3 years, no fault. No subsisting default. That is, at the time when we are going to make the DVR issue, at that time, there should be no subsisting. Subsisting means at the time when we are proposing to make the DVR, when you are proposing to make the issue of equity shares with differential voting rights. There should be no subsisting default in payment of declared dividend. Once the company declares the dividend, you are going to study that in dividend, I think, when you learn that it has to be paid within 30 days. And maybe you already know that 30 days. So there should be no default. If it is not paid within 30 days, if it is not paid or claimed, it has to be transferred to a separate account, blah, blah. Any default in that. Okay? No, you cannot make DVR issue. No default in repayment of matured deposits. No default in redemption of debentures. No default in redemption of preference shares. No default in payment of interest on debentures and deposits. No default. Also, no default in payment of preference dividend. Means you should have consistently made profit and paid preference dividend. No default in repayment of term loan with interest to any public financial institution or state level financial institution or scheduled bank. So these 3 categories. But 5 and 6 small differences. Subsisting default is there. If it is made good, then you can go for a DVR issue. Suppose you have made good, you have paid it, closed it, you can go. Here, if there is any default here, then the equity shares with differential voting rights may be issued only upon expiry of 5 years from the end of the financial year when the default was made good. For example, company has not paid preference dividend or they have not repaid the term loan with interest. So this year they repay it. Now they can issue DVR shares only on the expiry of 5 years from the end of the financial year when default was made good. So, continuing with my question, Mediocre Limited wants to issue DVR, the MD also informs you that the company is yet to repay its matured deposits. Also, the company has not repaid the interest, the term loan, repaid the term loan with interest for the last 6 due, or a sum of rupees 42 lakhs is due at today. Okay. Now you have to advise the company very, very carefully. You should give them all this, advise the company, and then say, in the instant case, the company has made a default in repayment of matured deposits. Okay. So therefore, it cannot issue. Even assuming it is repaying the matured deposits, it has also not repaid term loan. Therefore, the company can make an issue of equity, a differential voting right share only on expiry of 5 years from the end of the financial year when the default was made good. This is the advice you will give to give to the MD of Mediocre Limited. DVR also has to be issued to normal existing shareholders first as that. No, that's a good question. When we are going for rights issue, your question is whether when I am issuing differential voting rights, should I make a rights offer? Should I make a rights offer in proportion? No need. Okay, no need. A further issue of this class, if you are making further differential voting right, you have to go. But normal equity, no need to offer the differential voting right. Good question. I am unable to understand how 50 came. Where is 50? How 50 came? Here. See, what is the total voting right? Total voting power, 2 lakhs. How do I get 2 lakhs? Normal equity share, 1 vote per share, 1 lakh. Shares carrying differential voting right, 2 lakhs, number of shares. But every 2 shares, you will get only 1 vote. So these DVR walas will get only 1 lakh. The normal wala will get 1 lakh. total voting power at a meeting of the company. How many votes will be cast? 2 lakhs. That is called total voting power. Out of that, what is the voting power of equity shares with DVR? 1 lakh. 1 lakh by 2 lakh into 100 equal to 50%, which is less than 74. Therefore, issue is allowed. Sir, have you understood it, sir? Term loan means, see, when you borrow money, which will be repaid over a term, over say 7 years or 10 years, that is called term loan. Usually we borrow term loan for funding fixed assets. Suppose I want to buy machinery or build a factory, then I will need bulk amount now. So I will prepare a project report and I will go to a public financial institution, like say, today we don't have PFIs, no big P. In those days we had IDBI and all, but today we have scheduled banks. Okay, and we have state level financial institutions like in Tamil Nadu, we have Tamil Nadu Industrial Investment Corporation, TIC. I'm sure Maharashtra has MIC, Gujarat has JIC. So whatever it is, Gujarat Industrial Investment Corporation, whatever. These are state level financial institutions. So these state level financial institutions, they will lend term loan. Means, suppose my project cost is 200 crore. They will ask me to put up 20 crore or 50 crore, 25% or 20%. So I will put in. Out of 400 crores, they will say you put 80, that's 20%. Balance 320 we will give. So that 320 will be funded. As and when the project money is spent, they will also give, I will also give. So that loan will be repaid in 10 years or 7 years. That is why it is called a term loan. It is for a fixed term. As against a cash credit account or an overdraft account, which is an on-demand loan. You know, it's good for you to know, because later on you might come across these terminologies in law. On-demand loan. See, if the bank is issuing a cash credit or overdraft to you, they can ask for the repayment at any time. Whereas a term loan, they can't ask for repayment before the expiry of the term. They can only expect you to pay the installment, right? If you have taken a vehicle loan, it's a term loan, sir. Because your vehicle loan would be for 36 months, 60 months. That's a personal kind of term loan example. But usually we use the word term loan for businesses when they borrow, right? Hope this is clear. Kavita ji. Oh, more conditions are there. Shit. Let us see. The company has not been penalized by court or tribunal during the last 3 years of any offense under the Reserve Bank of India Act, SEBI, SCRA, Securities Contract Regulation Act, FEMA, or any other special act. So, you have to be very careful. There should not be any penalized. Only then they can go for DVR issue. See, they are trying to make it very difficult for delinquent or badly managed and non-compliant companies to go for DVR shares. Because, see, remember, when you are issuing DVR shares, to an extent, the shareholder's right is impaired, weakened. So that company which is issuing DVR should be a highly trustworthy and well-managed, financially sound and compliant company. That is the goal of this condition. Somebody asked me this question in a different way, and I said, to my knowledge, no. To my knowledge, Mr. Pradeep Gupta, no. 2 votes for 1 share, I have not seen. 2 votes for 1 share. I don't think you can issue. You can't issue. You cannot issue. The company shall not convert its existing equity share capital with voting rights to equity share capital carrying differential voting rights and vice versa. So, Suprata ji was asking this question somewhere earlier. Yes. So that example, I have again repeated it for you. Let us go back. Suprata ji, have you understood? Can you confirm that you have understood? Since you have said that you have not understood. You have also asked the question, can existing equity shares be converted to DVR? I think the answer is no, it cannot be converted. Also, DVR cannot be converted into ordinary equity shares. Okay. But the holders of equity shares with differential rights shall enjoy all other rights, such as bonus shares rights. Hey, I stand corrected. So, suppose you are a DVR shareholder. If the company is going for a fresh issue of equity ordinary shares, those shares also should be offered to you. Your question was whether the DVR should be offered to the existing shareholders. No. But once the DVR issue is made now, the DVR fellows are there now. Once you are making a further offer of shares of ordinary equity shares, that offer should be made to the existing equity shareholders also, to these fellows also. Okay. They'll have the same rights as all other equity shareholders. Okay. Any right which the existing equity shareholder has will be available to the differential voting right share also. Okay. The register of members shall also contain all the relevant particulars of equity shares with differential rights. Very clearly, it should mention that these shares are carrying differential rights. Okay. Thank you, Suprataji. Good. Company has taken loan from NBFC and cannot repay the loan with interest, can issue. NBFC can be done because it is not here in the list. NBFC is not in this list. Therefore, it can be done. Okay. Can he issue DVR shares after default made good? Why? Even if you are not repaid, you can go for DVR because that is not here in this list. Term loan taken by the banker. Term loan taken from the bank. Maybe propositional thing. Term loan taken by the, have we put term loan by the bank? No. Term loan taken from the bank. Bank say, from the bank. Okay. If I have DVR and company has issued bonus shares, so I get DVR shares or, that's a good one. You will get normal shares because the bonus shares are normal shares. See, it's a good question here. Sometimes Abdul, you are asking right. That is, you are a master of questions. In fact, there used to be one Batman villain, I'm not a villain, but I'm a great fan of DC and Marvel. So one of the Batman villains used to be called questioner. His only job is questioner. In fact, his dress itself will be completely question marks. Only question marks will be there. And so he will keep on asking questions. So you're a questioner. But you're asking a very good question. If I have DVR and company has issued bonus, do I get DVR or normal? Normal. What was the bonus issue? Normal issue, na? Normal. Suppose the company is issuing bonus shares, it will be normal shares only. It will not be DVR shares. Bonus issue will be only normal shares. And that you will also get. But that will be normal share, which will entitle you to normal rights. Okay. When there is a compromise towards voting power of the member, who will vote instead of the member or the part of? No vote. These donkeys will get only one. For every 2 shares, they'll get only 1 vote. Your so-called compromise, whatever you call it, there is no compromise. Buggers agreed to one vote for 2 shares. So if I'm holding 2 shares, I'll come and vote on a poll, 1 share, 1 vote. That's all. Nobody else will come and vote for it. That is all I can. That is the only reply I can give to you. You agreed now. That is the point. See, again and again, I'm telling you, this is not a very popular method. Rarely companies issue. They are not preferred. Sometimes they issue. Okay, and they get it. This is also not a very, very, very popular, regularly used method. There is a provision in the Act. If you want to use it, use it. When I will use it, when I want to retain some control, but I want some funds very badly, then I will go for this. In fact, what I would suggest now, instead of going for DVR, you are better off issuing preferences. What do you say? In fact, one of my boards, say 3 years ago, 2020 or so, 3 years ago, just before pandemic, we had a case where a company wanted to allot shares. It wanted infusion of capital, but it did not want to let go of control. So the investor also wanted to invest, but not take control. So what we did was, the entire money came, we divided that money into preference shares and equity. So equity portion was such that the controlling group will continue to have 60%. The balance 40% only stake will be sold. The remaining money that was needed for running the business came as preference shares. 9% preference shares. Optionally convertible preference shares, for your information. So why go for differential voting rights when I can as well go for preference share, redeemable, etc. But differential voting rights, not redeemable. You will have to hold it till the end of the company. At the time of winding up, along with others, you will get your money. Okay. So generally, I prefer preference shares to differential voting. It's too much of a bother. But still, you are the CFO of a company and you want to do something innovative. You want your name to come in Outlook Business. Then you do this, differential voting rights. Then you call the press and then you pay them some money and tell them, put a press note. Okay, Mediocre Limited goes for differential voting rights. Interview with CFO. Mr. Petladwala Kojima, like that. And then your photo will come on Outlook Business. I'll be Buddha at that time, but I will read it. Wow, that's great. This company has gone for differential voting rights. Great. Wonderful. So we have understood what is differential voting rights. I hope to the best of my knowledge and ability, I have given my answers to your questions. I think I'm hitting Abdul too much with this questioning thing now, but Abdul also is not letting go of his energy. He's continuing to bombard with questions. Fantastic. Okay. Good. Questions are good. Questions are the beginning, but somewhere we have to be able to get our own answers and get our clarity and proceed with life. See, suppose you're always asking questions, not clear, then CA exam will become very difficult. Somewhere you have to say, chalo yaar, this is what I'm going to do. Let us see and write. You will see that you're right. Okay? This confidence you have to build. An important quality that you need in CA exam is confidence. Otherwise, think about it. Most of you people are more intelligent than me. But how this man completed? Have you ever thought? That too, he got rank. All India 27th rank. How possible, yeah? Such an idiot. Such a fellow who knows nothing. Huh? Everything he says, I'll check up and get back. I don't know. How he will clear with rank? Think like that. So that is something, clarity. Okay, not getting confused. Going on. Good. Supradaji will today maximum number of questions will be asked by Suprada, I think. Great, madam. Sir, will DVR get priority over normal equity shares? No. Equal. The priority, no. Only they will get more dividend, that's all. At the time of winding up, in the queue, all of them will come together. Pro rata. Pro rata means, in this example, totally how many shares? 2 lakh plus 1, 3 lakh shares. Repayment, money is sufficient only for 50,000 shares. Then, I'm having money for 50,000 shares, total 3 lakhs. Then, proportionately, I pay. Are you able to understand? So, 1:2. Am I correct? 1:2. So, 1/3, 60,000, let us say I have money for 60,000 shares. Then, 1:2. So, 60 and 30. 40, and I'll pay it. Okay. Thank you, Mr. Sachdev. Thank you. So nice. Occasionally, when a compliment comes in, we feel energized to continue with the session. That is nothing else. Thank you very much. Physical share certificate. Now I'm coming to share certificate, section 46. Okay. So, alag topic hai. We have changed the topic. We have come to a new topic. Physical share certificates may be issued under the common seal or may be signed by 2 directors or by 1 director and company secretary if appointed. Generally, public companies which are not listed and private companies issue physical share certificates. Okay. So, share being movable property, possession of share certificate shall be prima facie evidence of ownership. So, whoever has possession of the share certificate shall be presumed to be the owner. Prima facie means at the first instance, on the face of it. So, as I already told you, this watch is mine because I am having possession. So, possession is 9/10 in law. If you are having possession. So, physical certificate possession. You cannot transfer. If you noticed physical share certificates, they would have printed on it. Transfer of the shares cannot be entertained without the submission of the physical share certificate. So you cannot say, I am the owner, this is my ID, change it. No. Return the share certificate. Then they will note it. And again, they will enter the name of the new guy as the owner. Certify it. At the board meeting, they'll approve it and send it back. Okay. So possession is very, very important. Physical share certificates will have distinctive number. Physical share certificates will have distinctive number. This does not apply to dematerialized shares. Because once shares get dematerialized, they become records or become entries in the records of a deposit. Okay. So it's like, suppose you go to the bank and you deposit 5,000 rupees in currency. Of course, the individual currency note will have some unique number. But once that currency is deposited into the account, that currency goes away. Yeah? Your account will be credited with how many shares? Shares. How many rupees? 5,000 rupees. Thereafter, if you go back to the bank and say, give me that note that I gave you, the bank will say, please go out. So you are having 5,000 with us. You transfer that money, I will transfer it for you. Issue a check, I will honor it. But 5,000 rupees. So once you surrender your physical shares, everything will be destroyed. You will get, if you are holding 500 shares in Reliance, your DP account will be credited with 500 shares. That's all. Okay. No distinct numbers, nothing for dematerialized shares. Entry in the records of a depository is prima facie proof of ownership for dematerialized shares. I'm sure many of you will have will be having DP account. Okay, take out a printout of this stock statement. If you go online, there will be many reports in the online website of the broking house. I'm sure all of you have a broking account and a DP account. If you don't, kindly open one and keep it, and because it's going to be of use to you. Suddenly you don't have to worry about it. Open it, and so keep because DP account is necessary for holding other types of securities also. So, for example, you want to buy e-gold, then you need a DP account. It has to be held only in the depository account. Okay, e-gold, where e-gold is similar, na dematerialized gold, where you won't buy physical gold, rather you will buy e-gold. So what happens is the commodity exchange where you're doing it, or the commodity that the whoever is offering the e-gold product, they will be holding the physical gold. They will be having physical gold, but they will credit your account with so many grams, not with value. So if you're buying today, if you're giving 5 lakh rupees, they will see what is the gram value for 24 karat gold today, and then that divide by the value and you'll get number of grams. Now that, and with some charges and all that already negotiated, they will reduce it and they will credit the grams into your account. That's it. And you keep watching your gold. The gold price is going up, enjoy. The gold price is going down, we'll buy. Wow. Welcome to the materialistic world. But then, this is about e-gold. Similarly, dematerialized shares. Why I gave the example of e-gold? If you can understand e-gold, dematerialized shares, same thing. Instead of physical shares, you are holding so many shares in the records. That's all. Okay. And then whenever you want to sell, you go to your broking house, you go to the online trading platform, you go there, see what is the current price going there, place an order, some donkey you want to buy, sell it. That's it. Immediately your DP account will be debited, meaning removed, and his DP account will be credited. That's it. That day evening it will happen. It will happen. Next day the company will get the information. They will update the register member also. That's it. No delay. Straight away. And you will become, your account will be minus, his account will be plus. Suppose you are buying reverse. Some donkey is selling, that donkey's account will be credited, you will get it. That's it. Okay. So easy. If only you know how it was done in those days, you will understand how I am so happy. Because I used to hold shares in physical form. Not one or two things. In those days in 1980, 89, 90 till 93, I was holding shares in physical form. And then I sold all my physical shares. I sold all my physical shares pre-Harshad Mehta. I sold everything at the peak market, took the money, and I ran away from the market. And then I never visited the market again till 2002. Till then I was busy building my practice, earning money and saving money in FD and all that. Never I went into the share market. So I missed the so-called .com crash. Missed it means literally my money was safe. It was not in the market. So when the .com crash got over, after the great work done by the great Mr. Kaitan Parekh, when the .com crash came and people committed suicide and all, market bloodbath, and it came to the lowest level, then I took all the money from the FD and I put it in the market. When all blue chip shares were going at throwaway prices, I invested in the market. Just for since you are entering into the exciting topic of shares and share capital and share market, I thought I will tell you something. DP account and DMAT account are same. DP. See, basically, DMAT account is held with a depository. We'll be talking about that. Don't worry. In a short while, I'll come to dematerialization. At that time, I'll tell you in more detail. You will know it. Last line means the member is the share certificate. Last line means the member is the beneficial owner. One second. Yes, member is the beneficial owner. In case the member, see, if suppose the guy whose name is mentioned as the member is not the beneficial owner, he has to make a declaration. And that also has to be noted. that he is not the beneficial owner, and the name of the beneficial owner has to be noted. What is SGB? I don't know. Suddenly you are putting something there, SGB. See, you please understand, I am not as intelligent as you are. Suddenly if you put SGB, I may not be able to understand it. Physical share certificate shall be in the form SH.1 or SH1 or as near thereto as possible. Okay. Suppose I have lost my physical share certificate, then duplicate share certificate may be issued by taking some precautions, etc. You have to take indemnity bond and all. And friends, today I am yet to see physical. It's a long time since we had physical certificates. Only public companies, private companies, we print physical certificates and all. Listed companies, compulsory dematerialization, right? So physical only for unlisted public companies and private companies, right? I will explain more about DP and DMAT very shortly once we come to dematerialization. Penalty for issuing duplicate share certificates with intent to defraud. There's a fine, minimum 5 times, maximum 10 times, or the face value of the shares issued, or rupees 10 crores, whichever is higher. And of course, if the officer has done this, then action under section 447. Sometimes some greedy fellows, what they will do, sovereign gold bond, yes. Okay, SGB say, come on, don't go there. SGB is different from e-gold. Don't. I just gave an example of e-gold to help you understand the dematerialization concept. If you have understood it, chalo, don't go into that comparison. SGB is different, e-gold is different. SGB alage, e-gold alage. How? Verify. You go to the Google and find out why SGB is not e-gold. In SGB, you have a contract with the government. There's a price that they fix. At that price only, you will redeem it. I have invested in SGB. SGB is also equally good. Especially when SGB came, the gold price was low. But remember, SGB is a close-ended product, whereas e-gold is open-ended. You can sell the e-gold whenever you want, at any price that's going in the market. SGB, no. You have to wait for the term to get over. Only then you can sell it. A lot of things. Okay, see, this class is not meant for such comparisons, Mr. Chaurasia or whatever you are, Piyush G. Okay, so don't go there. If you want to know more about it, go to the net, SGB, comparative. There are donkeys who have done comparative blogs and all. There are fellows who have spent valuable time giving comparison. E-gold, SGB, physical gold, ETF. 4 products are there in gold. Donkeys have done blogs and all. Go and read it. Fantastic blogs are there on which is better, which is not good and all. The general conclusion is SGB was at that time great in terms of return. Now SGB is not issued. It's a close-ended scheme. Right? It's gone now. But e-gold always available. You can go and buy. Anytime you can go. Okay? And you can buy. In addition to this, you have commodity futures. You can buy future gold. You can buy into gold futures. That is ultimate. You should go there and do that. Piyush, what do you say? Okay. Sometimes you might be thinking, why is this fellow smiling like that? So he's just thinking, okay, money. That's why, this topic is an exciting topic, because this is one topic which relates very closely to the share market, money making. The share markets attract people. Okay, they feel so excited when they go to the share market, whether they have the knowledge or not. They invest in these small, in those days, pieces of paper. Now entry in the records of a depository, and they think, we have come to dematerialization. See, this type of fraud, who will do? Sometimes some companies which are proposing to go for public issue, they will quietly issue duplicate share certificates and sort of confuse the thing. But usually this is avoided by the merchant banker employing a multinational firm to do a due diligence, and a legal firm also to do a due diligence. That one law firm will come and they will take a rod and they will insert it in the anus of that company secretary and that MD, and they will hit and see to it that all the records are correct. Only when they give the clean chit, the merchant banker will give his consent letter. Otherwise, the merchant banker won't touch that company. So it is not as easy as we think today. In those days, yes, when SEBI was lax and merchant bankers were greedy, they took any and every company. Now, in case later on it is discovered that there is any such fraud, the first fellow who will go to jail will be the merchant banker. Therefore, they play it safe. They hire Amarchand Mangal Das, Fox Mandal, or some law firm, Ernst Young, Deloitte, and they say, you go. Because tomorrow anything goes wrong, you go to jail. So this Deloitte and Amarchand Mangal Das or Fox Mandal or whoever, they will come and they will, or Dua and company. They're all very big law firms. I'm not trying to think. So they're good firms. They are very excellent legal firms and audit firms. They will come and they will, as I told you, put a latti, hit till you are crying, and then they will get all the truth. Then they will give a report. Then the merchant banker will say, Baba, you do this, you will give me value, I will go public. Otherwise, please go. So this is how, to an extent, SEBI is protecting the investors today. It is not possible in today for Harshad Mehta to come. For another fraud, Harshad Mehta fraud cannot happen today. It's going to be very difficult. Harshad Mehta came at a time when the market was not online, when there was no transparency in the price discovery process. There was no transparency in the price discovery process. Ketan Parekh also came in the middle when people were euphoric about online trading, when dematerialization had just come, and there are a lot of people who thought they are highly intelligent. They went into the market. They started thinking they are all great people. They doubled it and all. And it ended in a lot of things. Okay. We'll have a break. Another 5-10 minutes, I'll have a break. 7:45. As usual, we'll have a break at 7:45. Okay. Yeah, see, there are two types of due diligences. One is legal due diligence, because in addition to shares, etc., there would be contracts also. Whether any contingent liabilities are there, whether any litigation is there, which could result in liability. All that we have to see. So usually due diligence will be done by a CFM, maybe a practicing company secretary, if you so desire, only for the secretarial part, the company law part, and the law firm. Everybody has to go in and do their work. What is Harshad Mehta scam? Wow. I think Harshad Mehta is the hero of a movie or something, a teleseries or movie. Watch that. They have made him into a hero. Watch that movie. You will understand what is Harshad Mehta scam. And also ask people who lost money and committed suicide, thanks to Harshad Mehta and Ketan Parekh. They will also have a story to tell. Check out on the net. Harshad Mehta scam is a very important concept that every finance professional should be aware of. So I wish that would become part of your syllabus somewhere. One chapter. Share market scams like that. Okay. Right from, there are early scams also, right up to Satyam scam. Okay. Or anything else which may come in future. So beautiful chapter. Unfortunately, there is no single book covering all the scams that have ever happened. Unfortunately. The scam happened in 1992, yes. Scam happened in 1990. That's why I was not very clear about the dates. I think I sold my shares in 1990. 1991, roughly at the time I sold all my... Something told me that this market was not for real. Intuitively, I realized that this market was not for real. So my money was locked up. About 4 lakhs was locked up at that time, 1980, 90, 89, 90, 88, 87 to 90, we had been investing money, and my partner and I, and 4 lakhs was there. So I told him, let's sell it, Baba, you take the money. No. Market will go up. You don't know anything. You are an idiot. Absolutely, I'm an idiot. You give my money, I'm running. So my portion was sold at the current market price. We valued to market price. With a nice fat profit, I walked out of the market. Then it continued. Another sometime it continued. Then Harshad Mehta, what he did, he took certain dud shares and then he started buying and selling them. About a group of about 10 brokers kept buying and selling. So that suddenly they artificially created value. It seemed as if these companies are all good companies. And then due to bad, there was no internet at the time, nobody to want. There were people to want. In spite of that, the greed. So people started buying these dud shares. And then finally, when Harshad Mehta was cheating the banks, taking money from the bank and using that money to fund this, the bank discovered what he was doing and they arrested him. When he went into jail, he could not sustain this pricing. So a share is now being purchased and sold by Harshad Mehta Group at 450. Public bought it at 500. They are all holding it now. When they want to go and sell, nobody to buy. So overnight, the price of the share started collapsing. these so-called Harshad Mehta shares on Karnataka ball bearings and all started collapsing. So matter of 2 days, 3 days, it collapsed. Thereby, many people were affected. Of course, intelligent investors were never affected. Value investors were never affected. Only greedy, ignorant and greedy people were affected. But that's okay. Still, what Harshad Mehta did was not correct. Yeah, there is one. But today, we are worshipping Harshad Mehta as if he's some sort of a hero. He's a fraud. He's a third-rated fraud. Okay, and should be recognized. Though at that time he was lionized. I think some people gave him award and all. They called him the big bull and all that. Okay, he was a fraud. That's all. Third-rated fraud. That's about it. Okay, good. So, dematerialization, demat, common short term. So somebody was asking about break. Suprada ji, just hold on. Hold on. Okay. Suprada wants a break. We have also come to a point where it is a closing of one topic, moving to another topic. Let us take a break for 5 minutes. Okay. 5 minutes ka break. So break, sir. Welcome back from your well-deserved break. So, there's a nice input from Mr. Muhammad Aslam, suddenly who's come in with this comment. He says, he makes a very valid point. He's saying, if DVR is more than 74%, it is possible that they could pass a special resolution by themselves. So they want to put a cap and say 74, so that they cannot pass a special resolution by themselves. Right? So if all are voting, then other guys also should vote for a special resolution. If it is 74, that is his understanding. Okay. He also say, I was to be a thinking machine. Maybe he wants to be a thinking machine. Good. Companies having more than 200 members, other than private company, postal ballot is applicable, is given. So we can replace more than 200 members instead of listed company. No. Please don't go there. That topic will be covered in management and administration. At that time, you ask this question, doubt, whatever. Right now, don't confuse between two topics and get into unnecessary confusion. This has to be done by a postal ballot for a listed company. That is all. Because only if that topic is taught fully, you will understand this differentiation between what is applicable to a listed company and what is applicable to all companies having more than 200 members. Okay, so kindly, that knowledge needs to be imparted to you in a systematic manner on postal ballot. Then this question can be answered better by that faculty rather than by me at this stage. My humble suggestion, keep this question in reserve and again raise it at that time. Okay. So we will now go to dematerialization. So dematerialization is the conversion of securities, especially shares, but not necessarily. Debentures can also be dematerialized. Most debentures are held in dematerialized form. Any listed security is held in dematerialized form only. So, conversion of securities, especially shares, from physical certificates to electronic records. Okay. So, the physical share certificates are then cancelled and destroyed and retired for circulation in exchange for electronic recording in the records of a depository. I was very much an active investor when dematerialization was introduced in the 90s. Meaning, I was not investing in the market, but I was watching the markets. So I used to attend all the capital market events. I used to go to meetings. I used to see. But once or twice I will apply for IPO and I will get the allotment and keep it. But that also rare. I should see an absolute bargain valuation there. Otherwise, I won't go and buy. So when like that. But so I used to go. And so I had no shares at the time when dematerialization was introduced in the 90s. Nothing to hold. It was only later on that I got into the market in 2002 that I opened a demat account. Around 2001, I opened my demat account. Till then, I was not having any shares, as I told you. When the market fell and I found the value, then I decided to buy shares. At that time, when I went into the market, they told me, Mr. Srikanth, I was almost like Rip Van Winkle. Rip Van Winkle is a famous character in American story written by Nathaniel Hawthorne, who goes to sleep and wakes up 20 years later. So I went to sleep pre-Harshad Mehta and woke up post-Ketan Parikh. And I went to the market and they said, you should have a demat account. So for me, it was very simple. I had no shares. I opened a demat account. My very first share was credited into the demat account. Okay. But suppose somebody had been holding physical shares, then at the peak time of dematerialization, they would have had to deposit all the shares with the company. Those shares will be destroyed and he would be getting a credit in the DP account. So he should give his DP details. Even now, many great human beings are holding shares in physical form in listed companies. All old fellows, 90 years, 80 years. They want to see that shares, they hug it and make love to it. I don't know what they'll do with it. So, but they can as well do that. Now, today, all listed companies, if you want to transfer the share, you can do so only through the electronic market, electronic trading. And if you want to do it through electronic trading, you have to have a physical certificate. So maybe I'm wrong. You can do it off-market deal also, but whatever it is, if your company is listed, the securities should be held in dematerialized form. So if you are having physical shares, you cannot give delivery. Means if you are having physical shares, you can maybe do an off-market deal and run away. But the guy who bought it from you will be in deep shit because he cannot transfer it. Because if he wants to sell it, he has to go to the company, convert it, and then get the transfer registered, then make it dematerialized, and then only he can sell it. Okay? Now, so basically, in India, once dematerialization was introduced, they established two depositories, namely NSDL and CDSL. Expansion, National Securities Depository Limited. This is the symbol of NSDL. And CDSL, Central Depository Services India Limited, CDSL. These are the two depositories. There are only two. They are the depositories. They have the electronic, the data is held there. They control the data, and they are highly secured environment. They spend huge amounts of money for perimeter security, physical and logical. They keep on employing ethical hackers to see to it that there is no penetration. They go for a penetration testing every other day, every other month. They have to get a clean sheet for penetration testing that no hacker could enter. That it is impossible to breach. Or if any weakness is exposed, immediately they correct it. So they keep employing people called ethical hackers who will go online and try to hack into their database. Attempt to hack. So the firewall should alert immediately. If the firewall is sleeping, then they will inform. Your firewall allowed me to go there. And so on and so forth. But that's rare. That's rare. NSDL and CDSL have invested heavily in technology by which. Right. They in turn have authorized banks and registered to the issue, the share transfer agent, those guys, and NBFCs to act as depository participants. So these depository participants are the agents of these two depositories. All the depository participants will be having account with both. Okay. So you go to a depository participant, you tell, I want depository account. Immediately they will open a depository account with one of these guys, NSDL or CDSL. Okay. So the account that you have with NSDL or CDSL is the demat account. It is accessed through your DP. Demat and DP both same. Demat account, DP account same. But prefer to call it demat account because that account is held with NSDL or CDSL, not with the DP. With the DP, you have an understanding by which the DP gives you access to the demat account. The DP is the agent of the NSDL or CDSL. Through your account with the DP, your DP account, you will access your deposit, demat account. And you'll see how many shares you have. All this will be done through the depository's skill. So you will never go to NSDL or CDSL. The idea is to protect NSDL and CDSL from hacking. So you will always be dealing with the DP. So any query that you send will go, if in case you are a hacker, you want to hack, you're trying to go through the depository, there will be a wall. The depository won't permit you to go further. DP won't permit. Only then you'll go to NSDL, CDSL now. So that becomes the first level of protection for the NSDL and CDSL. So DPs are. So your account will be with the DP only. So there will be a secured socket layer by which once the transaction starts, like in your banking, once you go through the bank's site, when the actual money is transferred from account to account, now it will go through SSL, secured socket layer, highly encrypted, and it will go. So that type of security is used between the DP and the depository. So you get protected. That is why they have created a two-tier structure by which the public will have only access to the depositories. Depository participants, who in turn will give access to the depositories. Okay, I hope I have explained clearly who is a depository participant, who is a demat. So when you open a DP account, you are opening a demat account, which will give you access to one of these depositories. wherein you will hold your shares in electronic form. Okay? This is how it is. So, how many of you have a DP account or a DMAT account as the case may be? If so, with which DP? So, we already saw the names of the two depositories, and with the age of virtual and online transactions and the introduction of the Depositories Act, securities no longer need to be held in physical form. They can be registered and transferred electronically. The depositories made it compulsory. The Act has made it compulsory for all shares in listed companies to be in fungible form. Fungible form. That is, as an entry in the records of a depository. Fungible means electronic form, not in physical form. The word fungible is a technical term which means in electronic form as entries in the record of a depository. Okay, you have an account with NSDL, but who is your DP? Mr. Abhishek Pandey, who is your DP? Which is the DP? Depository participant through whom you go. Don't worry, if you don't have a DP account, it is not a problem. You can open it. What is that? Anytime you can open it. Now, some shareholders still want to hold physical securities and gloat over them or keep looking. I don't know what they'll do. They'll hug it, kiss it. I don't know what they'll do with the physical certificate. So what happened? Finally, SEBI got irritated. And SEBI said, look here, listed companies should not accept transfer requests for shares held in physical form after 1/4/2019. Are you able to understand? As I told you now, suppose you find a guy, you sell your physical shares to him and run away, he will be in deep shit because he cannot transfer it. He has to go to the company and convert it into DMAT. He can't do that unless the transfer is registered. So he will have to come back to you. You will have to make the application for dematerialization, the whole thing. So better you do it and sell, which means nobody will buy physical shares from you. You have to go to the company, submit the physical shares, go through the process of dematerialization, get the entry in the records of a depository, and then sell your shares to somebody in dematerialized form. That transfer will be automatically registered. So from 1/4/2019, all listed company shares have to be compulsorily dematerialized. Good. Suppose a public company is making a public offer of any convertible securities. It may hold such securities only in dematerialized form. For example, if a public company is issuing preference shares which are convertible to equity, then it may hold such securities only in dematerialized form. Conversion, we'll see it very shortly in the next class when we come to preference shares. Conversion means if I'm buying a preference share, I'll be holding it for 3 years or 5 years, and then I'll have the option or compulsorily it will be convertible into equity share. Instead of giving me money back, they will allot a certain number of equity shares based on the valuation. Fixed. Okay, don't ask me further questions on this. More when we come to conversion. I'm sure you have 100 questions to ask on this, or maybe you are aware of. Okay, so next billion technology private limited. Wow, what a name. Fantastic. Fantastic. Through Grow. I don't know. Wow. Names are exciting. The names are exciting. I have a DP account with a very unimaginative company, Novoma or something like that. They were earlier called Edelweiss. Before that, they were called Anagram. Successively, they are being acquired or changing the name. Anagram. Then they became Edelweiss. Now they call themselves Novoma. Some nonsense. I don't care. They are a good company, well established. I'm happy with them. What is in a DP? So long as my work is done and my rate is competitive. Because the DPs generally charge you maintenance charges and transaction charges and all. Every time you sell and buy. So you have to ensure that you negotiate well and get a better term. I'm sure money control, I don't know, yeah. Maybe they are a DP. I'm not aware, yeah. Maybe money control has because money control is basically a kind of portal, PORTAL, portal for financial information. So if you want to have information about shares or companies, financials, instruments and all, you go to moneycontrol.com. And so I'm not aware if it is a DP. Honestly, to my knowledge, it is not. To my knowledge, it is not, but I don't want to say it is not, and then somebody will correct me. So maybe it is, but mujhe nahi malum bhaiya. Maybe, but there are better, if better than money control you got, better. To my knowledge, moneycontrol.com is more of a knowledge portal, or rather, it's a portal for this. Maybe they have one business that does DP work also. I don't know. As I told you, mujhe nahi malum. Okay, it's not. But Money Control is an excellent site to download the app and keep it in your mobile. Because whenever you have, similarly, there is another nice website called Investopedia. That's also a very good, where many times, you don't understand the meaning of something. You can go to Investopedia and get your definition. But basically, Investopedia is an American website. So some terminologies are American, but still, you'll get a basic idea of what it's all about. Okay. Whenever I come across a term, because today, you youngsters, you keep using newer and newer terminologies, short forms and all. Buddhas like me cannot understand. No problem. Karlo Dunya Mutti mein. I got my solution in my hand. I just go to Investopedia and I put in your abbreviation and I will get the answer. So, see, think about it. You can come and ask questions to this donkey like me. Whom I'll go and ask questions? Only two people. For philosophical and spiritual question, I go to God or my guru. For this type of question, I go to Google. That's it. Okay. Or Investopedia. I get my answers. Sometimes even Investopedia and Google cannot give me an answer. Then I think for myself and I get the answer. Okay. So the promoters of every public company making convertible security issue may hold such securities only in dematerialized form. The entire holding of convertible securities held by the promoters in physical form shall be converted to dematerialized form before the offer is made. And thereafter, it will be held only in dematerialized form. Idea is to give facility to the holders of the convertible securities to sell the share once the conversion happens. Okay. If they are having a trading account, then they are also DP. If they are having, basically, Money Control may have a broking account with the NSE or NSE and BSE. So if there is an online trading platform which Money Control is offering to you, parallelly they may also offer you a DP service. Usually the brokers, they also have a DP service to facilitate. But there is no compulsion that you should take the DP service only from the broker. So the trading activity done by Money Control is done as a broker. Okay, so through their main broking account, they will give you access to the net. So whenever you buy and sell online, they will get a commission. You understand? Whenever you buy and sell, they'll get a small commission. And as you do volume, as you see the market growing, they'll say, put more money, buy this, buy Dubakur Limited, buy Sham Limited. So they will keep on telling you, and you'll also, wow, I want to earn money. So you keep on buying, selling. So everything you do, they will get commission. Fantastic, no? You should not be a trader in the stock market. You should be a broker. And get hold of so many bakras who will keep buying and selling, making loss, losing all their capital. And every time they sell, every time they buy, you will get commission. Better be a broker. In the court, preferably be a judge or a lawyer, never a litigant. In the share market, preferably be a broker, never a trader. Because no history of traders making money, but always brokers will make money. Now, I'm now going to talk about some procedure for issue of shares in dematerialized form by unlisted public companies. Every unlisted public company shall issue the securities only in dematerialized form and facilitate dematerialization of all its existing securities in accordance with the Depositories Act. Okay, this is given in the Companies Act, Rule 9A. No company has complied with it as of now. I know so many public companies which are unlisted, which are continuing to hold the shares in physical form because they don't want to go for dematerialization. But there is a rule that says they have to do it. Okay. Every unlisted public company making any offer of issue of any securities or buyback or issue of bonus shares or etc. shall ensure before making such offer that the entire holding of securities of its promoters, directors, KMP has been dematerialized. So if you're going to make an offer for issue or buyback or issue of bonus shares, you're an unlisted company, then you should ensure that the promoters holding, directors, etc. is converted to dematerialized form. Every holder of securities of an unlisted company who intends to transfer such securities after 2018 shall get it dematerialized, etc. See, they are trying to make dematerialization compulsory for unlisted companies. Okay, so this is what they are trying to do, but to my knowledge, it has not happened. To my knowledge, it has not happened. Okay. Move on to voting rights. I have already mentioned this to you. Basically, at an annual general meeting or general meeting of a company, in the first instance, voting is by show of hands. You raise your hand. If the number of only 10 fellows are there, all are known to each other, raise your hand. But once it becomes a larger group or confusion is there, then a poll may be demanded or called by the chairman. On a poll, meaning a balloting paper will be given and they will have to vote for or against. In the paper, they will tick for or against. So when I am holding 5,000 shares and I am ticking for, then how many votes for? 5,000, not one. I am a single shareholder, but I hold 5,000 shares. So when I say for, number of votes is 5,000. Another gentleman having 500 shares, he votes against. How many votes? 300. Because he is holding only 500. Are you able to understand? So the minute you go for a poll, one man, one vote, gone. One share, one vote. This is the dynamic of corporate management. Later on, when you come to management administration, you will understand this. I call this as the dynamics of corporate meetings, where once a proxy enters the meeting or once a proxy in the meeting stands up and says, Chairman, I demand a poll, the entire meeting will change because the proxy may be controlling 70% of the votes, in which case his vote will be 70 is to the remaining 30. Whatever you say, special resolution, blah, blah, he will win. Are you able to understand what I'm saying? He may not win a special resolution if all are voting. If totally 1 lakh shares, 3 lakh against, 7 lakh for, you can pass an order resolution. Special resolution is going to be difficult. Because 3 into 3, 9. I have only 7. Able to understand? I'm saying, so on a poll, voting rate of shareholder is in proportion to the value of paid up capital held by him. See, I said on a poll, 1 share, 1 vote. But the act says is in proportion to the value of paid up capital held by him, because you also have differential voting rate where proportion. For 2 shares, I'll get 1. Some proportion. Okay. But voting will be based on shares held. Got it? Thus, corporate democracy works on proportion in total value and not the usual one man, one vote concept in conventional democracy. This is justified because higher the stake, greater the risk. Therefore, greater should be the voting rates. This is how it should work. See, this is why one man, one vote is good, but it won't work. When my stake is greater, I should get more right. Am I correct? So this is the principle operating in voting rights. Every equity shareholder has a right to vote, right, on every resolution. So every equity shareholder, including DVR guys, they have a right to vote. But depending on the differential right, they will have that many votes. So where half right is there, then for every 2 votes, he'll get 1 vote. But he has a right to vote. But preference shareholders have a right to vote only on certain resolutions, not on all. Resolution which directly affect their rights. Sir, is my screen visible, sir? Ashok ji, is my screen visible? Because one student says it's not visible. Check out. Okay. I hope it is now visible. Let us hope. Swati ji, just check up again whether it is visible and confirm. Okay. So, preference shareholders have a right to vote only on the following resolutions. Resolutions which directly affect their rights. For example, if there is a buyback or if there is some kind of a reduction or something which will affect them, then they have right. But anything which, for example, change in the object class, they cannot vote. Change in the name, they cannot vote because it won't affect their rights directly. Are you able to understand? Any resolution for winding up. See, suppose they're going to issue equity share capital with differential voting rights. It will affect. Therefore, they have a right to vote like that. Any resolution for winding up. Preference shareholders also have a right to vote. Any resolution for repayment or reduction of equity or preference capital. Later on, we'll see reduction of capital. A separate topic in one of these sessions. In this topic, I will teach you. On a reduction resolution, preference shareholders entitled to vote. Otherwise, preference shareholders have no right to vote. Okay. When will the preference shareholders get the right to vote on all resolutions? When will the preference shareholders get a right to vote on all resolutions where the dividend on such class of preference shares remains unpaid for 2 years or more? So, for example, 2020, preference shareholders were not given dividend. No profit. So they didn't get. If there is a profit, they have to be paid. Compulsory. If you don't pay, there is a violation. You have to pay. Okay. So they are not paid. Then 2021, preference shareholders dividend not paid. 22, you want to hold a meeting. You have to give opportunity to preference shareholder also to attend. Because for 2 years or more, for 2 years, your preference dividend has not been paid. Then preference shareholders get the right to vote on all resolutions. Try to remember this. Unless you know it already, in which case, thank you for listening patiently. We already, somebody was confirming about 47. 47 does not apply to a private company. Also, it so happens, 47 also does not apply to a private company. Okay. So, provided there is no default by said company in filing financial statements and annual returns with the register. So, private companies can be somewhat innovating in structuring voting rights to their shareholders. 47 says every equity shareholder has a right to vote on every resolutions. Preference shareholders have a right to vote only on the following resolutions. Now, all this is applicable to public companies. Private companies, section 47 does not apply, provided there is no default in filing financial statement and annual returns. Then, private companies can have their own articles. They can decide on the voting rights and all that. They can do. The articles will decide. Okay. So, this is in the section itself. There was no amendment. Original 47 itself has it. We come to variation of shareholders' rights. Okay. Where share capital of the company is divided into different classes of shares, the rights attached to a particular class of shares may be varied. This can be done with the consent in writing of not less than 3/4 of the members of that class by means of a special resolution passed at a separate meeting of the shareholders of the issued shares of that class. So, you want to vary, for example, preference shareholders, you want to vary their rights. You can do so, provided you get the consent in writing of not less than 3/4 of the members of that class. Right? Variation of shareholders' rights requires a provision to that effect in the memorandum or articles of association. In the absence of such a provision, then the variation should not be prohibited by the terms of issue of such shares. If the proposed variation would affect the rights of another class of shares, written consent of 3/4 of such other class of shareholders also shall be obtained. Right? So, you can vary the rights of preference shareholders, or you can vary the rights of equity shareholders, in which case you have to get the thing. Or if you already issued differential voting right shares, you can vary their rights. But to do that, you have to. But one thing you cannot do is, you cannot convert DVR into ordinary or ordinary into DVR. You remember? This section cannot be used to convert ordinary into DVR shares. No. There's a prohibition there. There seems to be a conflict between these two sections. Some of you might see an apparent conflict. Please note, this section will be subservient to that, because that is a specific provision relating to differential voting right shares, which will be superior to 48. And you cannot convert ordinary equity shares into DVR or DVR into ordinary equity shares. Preference shareholders not owners. So can we, no, preference shareholders are not, no. Preference shareholders are also owners. All shareholders are owners. but they have preferential rights. Please understand. There's a slight mental calculation to do. So I will not say they are not owners. Debenture holders are not owners, but preference shareholders are owners. Between the two types of owners, preference shareholders have preferential rights. Got it? This is the way I have understood my concept. So preference shareholders are not owners, so we can say that if dividend is not paid for 2 years, they become. No. They are owners. They do not have right to vote on certain resolutions. But once the dividend is not paid, they'll get the right to vote on that also. Got it? That is how you have to understand it. Maximum how many years? That who knows, yeah. 2 years or how many ever years you want to put 3 vertical lines on his forehead, keep putting it. They are only saying if it is beyond 2 years, he'll get a right to vote on all matters. He'll come and poke his nose in your affairs. So if you don't want that fellow poking his nose, pay his dividend and send him out. Supradaji, I have this policy of not sharing PPT unless the class is completed, the topic is completed. Wait for that 1 week or so for the class to get completed. In the meantime, you use the Institute of material to revise. Once my notes comes to you, then for the exam purpose, you use it again. Okay. So this is my humble request. Next class, so that we shall have access to the screen is words. Oh, like that. No, I'm not. I don't know about that. I don't want to promise this because sometimes I change my slides in the light of some discussion or something. Then, I have to again upload the changed slide and all that. It becomes a little bit of a nuisance for me. My suggestion is try to see, to my knowledge, connectivity is good and I'm sending it correctly. So if you're getting some blurring in the screen, please try to think. But one thing, I am guilty because I have not uploaded prospectus and assignment, which I will do tomorrow. I will do that tomorrow, but this will not be uploaded tomorrow. I don't know. See, I would love to do it, but tomorrow if I'm changing something, I'll have to again upload the changed version. Please understand my dilemma. That is why I have this policy framework, that policy decision, I took it right from the first session. Batch 1 I have taken. I will not share unless I completed the topic. This is my decision. So kindly bear with me on that point. I don't want to change that. So just like you all have your own preferences and ego, like I have this thing. I will not share in between. I know I'm putting you in trouble. I feel bad. What to do? Bear with me. Okay, so suppose it affects their right. For example, buyback of shares, what will happen? The equity shareholders will, suppose you are giving better rights to the DVR shareholders, then to that extent, the voting rights of the equity shareholders will be affected. Now, the total voting right, their proportion will go up or down, right? Like that, there should be some impact. Please ask questions. I don't know. We'll see. I will work out some questions. But again, Aslam, I've already told you not to give me instructions in the query pad. I get slightly cheesed off when somebody gives me instruction. Okay. Don't give me instructions on what to do with my class. I have a plan of action for my class, which has worked with my students, and my students have been successful also. Trust me and work with me the way I do it. Don't give me instruction on how to teach. Okay. If I will work out some problems. I'm giving you some assignments. Try to work it out. Those assignments I will definitely discuss at a later date when we have time. Okay. I know prospectus I have not uploaded. Maaf kar dijiye. I will upload it tomorrow. Kal main de dunga. Okay, I'll give it to tomorrow. Okay. So I have sent the assignment for incorporation. Prospectus I have not yet sent. It's a case study. Our Abdul wanted case study, I'll send case study. Okay, so that case study also you see with multiple choice on it. I will work out that also. Okay. Can preference shareholders demand for poll? Good question. Preference shareholders may have a meeting of their own. At a meeting of the preference shareholders, any preference shareholder can demand a poll. Or if the preference shareholders have a right to vote on a resolution, at that meeting, they can demand a poll. Why not? In which case, they will also get one vote. One preference share, one vote. Because there is no DVR now. One share, one vote only. Okay, good question. So, variation requires and all that. Now, suppose I am varying the rights, shareholders' rights. I'm varying the shareholders' rights. But some of the shareholders are dissenting. Dissenting means not agreeing. So if somebody is not clear about the English word dissenting, it means not agreeing, not giving their consent. They don't, to consent, opposite dissent. I am not agreeing. I agree, consent. I don't agree, dissent. So dissenting shareholders of that class. If holders of not less than 10% of the issued shares of a class who did not consent to such variation or did not vote in favor of the special resolution, that is, they went to the meeting, they objected, nobody listened, resolution was passed, they did not vote in favor. They kept quiet, neutral, or they voted against. But in spite of that, the majority won. Then the dissenting shareholders of not less than 10% of the issued shares may apply to the tribunal within 21 days to have the variation cancelled. Application may be filed by any member of the class so authorized. So one single member can file on behalf of the entire class. Variation shall not take effect unless and until confirmed by the tribunal. So the tribunal will now come into the play. They'll apply their judicial mind, see if that variation is beneficial to all the shareholders, listen to the dissenting shareholder, finally pass an order. Order of the tribunal on any application will be binding on the shareholders. The company shall, within 30 days of the date of the order of the tribunal, file a copy of the same with the registrar. Right? So this is a fantastic point about variation of shareholders' rights. So when preference shareholders' dividend is increased, then consent is obtained from only preference or both equity. Oh, you want to vary only the preference shareholders' dividend? That is, it's enough if you hold a meeting of the preference shareholders and get their approval for the increase. Okay. But you're going to change the terms of issue. So you might have to actually amend the memorandum itself. So for that, you will have to involve the equity. Are you able to understand? Your authorized capital, you are going to say 10% preference shares. Now you are increasing the dividend, say to 12%. That requires amendment to the articles and amendment to the memorandum. That you have to involve your equity also. You understand what I'm saying? Because memorandum has to be amended. Now that you need this. Preference shareholders will not vote. Only the equity will vote on that. Are you able to understand? In a way, they can, because they are the owners of this company, prima facie. Preference shareholders are only owners, but they are entitled to preferential right. So amendment of memorandum only equity shareholders can do. DVR can be in preference share. No. See this chart. See this chart. Have I put DVR here? I have put only under equity. Preference shareholder itself is a variation. Nah. It's a class by itself. Within that, I don't have to vary. If you want to issue preference share capital with, say, 10% preference shares, issue another 12% preference share separately. Like that. That's all. Only the dividend can change. Now, otherwise, the rights are going to be the same. No DVR, no differential voting right in preference shares. Okay. Correct. If you feel strongly that increase in preference shareholders' dividend will need equity shareholders' approval, you are right. I will not question you. You are right. Okay. That's what I said. Anyway, it will require an amendment to the articles and memorandum. For that, you have to bring the equity shareholders in anyway. Okay. In case of OR, ordinary resolution, this provision will not apply. I'm not able to understand any of your comments. It can be changed by class meetings. Not able to understand. In case of ordinary resolution, the provision will not apply. Unable to understand. But it affects the, you are right, madam. Section 48, left part. See, again, I'm telling you one more thing. This repeating thing, don't ask again and again. When I'm explaining, concentrate. Don't be so busy typing question that you're not listening to what I'm saying. I will explain once more. I think what you mean by left part is this. See, already the company has passed here. The shareholders have consented. That is, they have gone to them. 3/4 of the shareholders have consented. Not less than 3/4 of the members of that class have consented. Or special resolution was passed at a separate meeting of the holders of the issued shares of that class. So you called that class and they passed a special resolution. Now, some shareholders attended that meeting. They were not happy about the variation. Maybe the variation involved reduction in rights. They did not want variation. Therefore, they went to they told the company at that meeting, no. But the voting happened and the resolution was passed, right? Now, these people are holders of not less than 10% of the issued shares of that class who did not consent. At that meeting or while asking for return, they not given the consent. They said, I'm not consenting. Or at the meeting, they went and they did not vote in favor of the special resolution. Such people may apply to the tribunal within 21 days. Okay? And then tribunal will decide, etc., etc. Okay? I hope you are now clear. For any change in memorandum and articles of association, equity shareholders will have to come. See, think about it. I'll put it differently. Suprada wants to increase the dividend of a preference shareholders. Please go ahead. You have to pass a special resolution of the preference shareholders, blah, blah, blah. You do it. In addition to that, you should also get the equity shareholders' consent because you have to amend the articles and you have to amend the memorandum for which only equity will vote. Okay. If you are very particular for that resolution also, you include the preference shareholders because you can argue that it will directly affect their rights. So better call them also and give it. Why go for increase? Suppose you are reducing the preference shareholders' dividend, then it will directly affect their rights. Therefore, even for the memorandum and articles amendment resolution, the preference shareholders are entitled to vote. Okay. Fantastic. Okay. So we've reached the end of the class and ideally at the correct time because I wanted to complete 30 slides today, almost 30 slides over, which is good enough. Thing. I do appreciate Suprada's point. Let me take a rain check on that. Maybe tomorrow I will try to share the PowerPoint, but if any correction is there, I may upload a new version 2. Be prepared for that. Then don't say, sir, you are uploading more than one version or like that. You should not have. Somewhere you should be there. You should not treat me like that father, son, and donkey. If I try to satisfy one person, another person should not get angry. Okay. So I'm going by Suprada's words. In good faith, I'm going to send you my PowerPoint subject to any corrections which may be executed during the class. I may see a typo there or something like, I may change it. In which case, I reserve the right to send another version later, which only will be the final and correct version. Any earlier version will not be entertained. Comment on based on any earlier version will not be entertained. Okay? If you are okay, I will send. Thank you. Wonderful. I enjoyed the session as usual. I hope you did. And looking forward to meeting you again on Monday. Have a great weekend. Study hard, but also take some time off to relax and enjoy. Bye.